Into Friday, it's clear the US dollar has continued to stumble, with setbacks intensifying in Thursday trade. The only actively traded currency that trades lower against the buck on the week is the yen, though even here setbacks in the yen are marginal, and when considering the massive run-up to fresh record highs in US equities, it doesn't come as much of a surprise. If anything, the fact that dollar yen hasn't pushed much higher could be a warning sign that even the yen could soon be in a position to make a comeback, especially with stocks once again looking extended and the global economy still dealing with a lot of downside risk that could easily make things uncomfortable real fast at a time when the comfort of central banks and government stimulus to support such downside risk has already been fully exhausted over the past 10 years in response to the financial markets crisis of 2008. But for the moment, the risk-on dynamics and dollar selling have commodity-correlated currencies like Kiwi and Aussie out in front against the buck, with these currencies up about 2% since the weekly open. Kiwi got a nice added boost from Thursday's above-forecast GDP print, while Aussie has been feeling good about S&P's adjustment in which the rating agency raised the country's AAA credit rating outlook from negative to stable. The pound is right behind, up about 1.5% on the week, still nervous about Brexit, but feeling good about a supportive run of data that included hot CPI and solid retail sales. The euro has also performed well on the week, up about 1.3% into Friday, though there has been less that has been specifically supporting the single currency, and here it's mostly been about the dollar weakness. We believe the dollar has come under more pressure of late for two major reasons. The first is the softer inflation data out of the US last week, and the fact that this reduces risk for a more aggressive Fed policy normalization. The second, and perhaps the more prominent one, is the ongoing push from the US administration to promote and implement protectionist measures that necessitate a weaker US dollar in order to be effective. As far as today's economic calendar goes, key standouts come in the form of German and Eurozone manufacturing PMIs, UK public finances, Canada retail sales and CPI, and US manufacturing reads. Of course, attention will also be placed on updates from the global trade front, headlines relating to Brexit, and broader risk sentiment. Technically speaking, we think it's important to highlight the significance of this week's moves against the US dollar, particularly in reference to the euro and pound, with both major currencies extending their respective runs to the point where the moves are no longer classified as corrections and are now looking a lot more like resumed uptrends that could be getting back to the bullish price action that had the euro trading at a plus 3-year high and pound at a post-EU referendum high earlier this year. That's all for now.